Morning, welcome to the live room starting here at 8 a.m. UK time. This is the 12th of January 2015, and we're going to take a look at the various Forex currency pairs and also one commodity. So hang in there for that. Before we do this analysis though, please be aware of the fact that this disclaimer is valid. The risk disclaimer states that trading for exchange and other financial markets is considered high risk and therefore may not be suitable for everyone. Please find out more information via a independent financial advisor to find out more on that. By continuing watching this webinar, you agree with the disclaimer mentioned here. You can always request a copy by asking and contacting binary.com. And as always, I thank you for your attention on this warning. By the way, you can get a recording of this webinar so you can watch another time or for the first time later in the week. It is supposed to be a long-term analysis, so it will stay valid for a longer time than just today. blog.binary.com/weeklytradingroom is the link that you need with your name and email, and you'll get an email when the recording is available. Okay, with that said, let's take a look at the euro dollar first of all. Here we go. Euro dollar, as you might have noticed, has been really accelerating to the downside since mid-December, falling from about 126 all the way down recently to 127, so almost 1,000 pips so far in these couple of 4 weeks, in fact, to be precise. So a lot of downside pressure, especially for the euro dollar. That is a substantial fall. So how far basically can the euro dollar go, and is there any trade left? That is interesting for that downside, or is there perhaps some reversal potential possible? Those are, I think, the most important questions. So let's try to answer those in this session. When we zoom out here, maybe even looking at the monthly chart just for a second, we can see, of course, the fact that price is breaking through this support level and is thereby, in fact, breaking through this triangle wedge. Okay? So that break could be significant. That is a bearish break. So I'm looking for more downside and not so much for an upside trade. That doesn't mean there couldn't be a small bounce eventually, but then I would expect the downside to continue. Okay, it doesn't exclude necessarily a rally of perhaps even a few hundred pips eventually, but I don't expect more than that. All right. If we look at the potential here for the euro dollar, basically we've had this triangle, of course, as I said. The last 10, 11, 12 years, the euro dollar has not really been much lower than 120. It's been staying above 120 historically here the last 10, 12 years for the majority of the time. In fact, hovering between 120 and 140 was the most average price. That's about this zone. Let me put that on the chart here. Oh, wait. Hang on. Good. My drawing tool was not cooperating. 120 to 140, as you can see, was kind of the average zone here for a very lengthy part of time. Lengthy part of time indeed. And 140, 160, well, we had some moments that price was above it, but those were more like peaks. And then we went quickly back into that average zone. We also had a few drops below 120, but here too, just quick, and then back into that zone. So obviously, one of the thoughts that perhaps some traders could have is, well, we've been below 120, but it was just nothing more than an excuse to go up again. And although that was definitely valid for here and even here and here and here, I do think that this time around it's different. I wouldn't count on that too much because of the fact that we've completed a wedge. Now, why do I think that we've completed a wedge? Probably if you've been here more often, you know why. But because this A, B, C, D, E basically completes the wedge, right? The fact that price went up for an E here in a very slow fashion, you see this blue E? The price prior to that, that is this part here where I have the blue squiggly thing, that was slow, right here, slow price action, very choppy to the upside, this part. So it actually looked very much like a rising wedge. You see that? These lines right in here. So that's typical for kind of an ending of a triangle. Also, the second clue is that the fact that price is moving down so quickly here is another sign, another signal that probably the triangle is finished and we could expect bearishness, strong bearishness, as we've seen so far. And I've been saying this already for very long. This is the euro dollar, by the way. Euro versus the US dollar. And I've been saying, as anyone who's been in here, in the trading room here, knows that I've been saying that. So those are the two main signals. So that's why I wouldn't expect much of a bullish bounce. I would expect this bearish continuation to continue. But how far? Well, one of the tools I am using is a fib. I like to look for retracements and targets. And 113 is the level that I have in mind, or had in mind, and we're getting close to that. But now that I've seen this big fall so far, my forecast is actually switching a bit, even perhaps to parity. When price was up at 140, I was thinking mainly about 113, to be honest, because that already seemed so far away that that was kind of like logical target for that point in time. But now that we see the confirmation of price moving so fast, slowly but surely I start even switching to the fact that the price could even go to a lower target, which is the minus 618 target, and hence parity throughout this year, in fact. So those are always difficult things. For the moment, though, as you can see, looking for downside down to 113. So those are the two main signals, reasons for, I would say, continuation to the downside. And yeah, it's behaving pretty nicely and so far as expected. If we look at the weekly chart, what could happen is perhaps a retracement. I would say not more than 125.70. It could go anywhere up to 125.70. It is possible, as I said, a few hundred pips rally is possible. One of the turning spots could be, for instance, 122, because that's that broken trend line. It's also this broken bottom here. You know that if something breaks, it could have the opposite effect in the future. So a broken support becoming resistance in the future, broken resistance becoming support in the future. So that is a natural spot where you can see a retracement. A turnaround for downside. Max, the very max, 125.70. Would not expect. I mean, if it does break above 125.70, we'll have to meet again in this webinar and rediscuss things, because then something else is definitely happening. One thing that we can do now, if we look at the daily, is put a fib, or even the 4-hour chart for the moment, put a fib from this swing high to this swing low, right? And we see 50 fib, another confluence here. Now the price doesn't even have to rally that high. It could go to the 38.2 or the 23.6 fib. Is there a chance we could even rally that high? Perhaps not, because if we look, now we're diving into lower time frames. But if you look at the lower time frames, you just see one fall, and who's to say that we couldn't see that fall again? But the problem is that when we get closer to 113, the chances of some rally are increasing. So we're kind of getting into that zone where, what is it going to do? Is it going to retrace, or is it going to continue? And it's getting a bit more, in that regard, a bit more difficult to estimate that. At this point in time, I would actually think the retracement higher seems more logical, to be honest. So I would expect price to get up to 119.50. And then I would expect price to get a turnaround. Am I very interested in taking a long to that upside? Not really, because it's a very strong downtrend. But if price gets down to 118, 117.75, I might be looking for a very risky counter trend long up to 119.50. But in all honesty, I think that the 119.50 short, in my opinion, is a better trade setup, or 120.60 short, than going for the counter trend long. All right. Things change if we manage to break below 117.50. Then I might look for intraday or intra-week shorts again to the downside. So as you understand, anything above 117.50 is kind of a slightly reversal bullish mode, but reversal with the emphasis on reversal. Below 117.50 we could see downtrend continuation. And we're in bearish zones from here, and from here. I hope that makes sense. What kind of target if we do break below 117.50? I would say for the moment 115 is a nice target. 113 is the main target, but price is not going to fall in one straight arrow. Actually, sorry, I correct that. 115 is the second target. There's actually a big monthly support level at 116.50, 60. So in fact, the target, if you break 117.50, the intraday target is 116.60. If we break 116.60, then 115.30. If we break 115.30, I guess 115 because of the psychological round level, but then 113. So those are the zones here. Here, here, and then here. All right. Let's move over to the pound dollar. Now the pound dollar has similarities with the euro dollar, but also some smaller differences. Similarity is the strong fall, the strong downtrend. A bit of a difference is the fact that the euro dollar is actually has broken through the monthly support, the wedge bottom, I should say. The pound dollar hasn't. So there's a bit of a difference in that regard. Let's take a look at the monthly chart. And if we connect the bottoms like this, you see that price is actually right at a support trend line. So that's a key difference. I would say a major bottom here on the pound dollar is this bottom here too, 148.25-ish. So, contrary to the euro dollar that has maybe one level left, 116.50, 116.60, and then it's really no monthly support in the way. The pound dollar doesn't have that. It actually has the downtrend in play, but it hasn't broken those key levels. It's actually approaching those key levels. So in this pair, some kind of maybe a bigger bounce seems more likely. So I'll be cautious, more cautious with the pound dollar. If we zoom into the weekly and maybe the daily, you can see that if we break this support line, we do have a bit of space, but then we bump quickly into another support level. So yes, we could have that breakout here, but a ton of space, no. So perhaps an intraday, a smaller trade here, a small intraday, max intra-week trade, I would say. And either here or here, we could expect a bit of a rally on the pound dollar because we are approaching a decision spot that which seems probable that there will be some reaction to it. It seems probable that price could respond to that level, and it seems probable that we would see some bullish retracement, reversal rally. All right. Now we'll have to see how extensive and how aggressive that rally is. If it's rather weak or mild, we probably see a bearish break after that. So that's basically the pound there. Nothing really to add. I mean, the downside is certainly more aggressive than the upside in terms of number of pips fallen in weeks. The downside here had an average, I calculated already beforehand, fell on average 75 pips per week if we count from the very top to the very bottom and divide those pips by the number of weeks. The upside here, if we divide the pips by weeks, had about 45 pips, traveled about 45 pips per week. So obviously this is about 67% faster downside. All right. What does that tell us? Well, to me it says that the downside is aggressive. To me, because of that aggressive downside, it tells me that even if we get maybe a small rally here, recovery rally, that downside eventually is more likely. So if we then zoom to the monthly chart, you can see that what is the most likely is that eventually we'll probably break down to 148.25, we'll bounce, and then we'll probably break down again. How far? The monthly target here all the way into low 140s in fact. So yes, here too, just like the euro dollar, bearishness to be expected. Now the story isn't much different in fact for the dollar yen. There's a slight nuance here too that should be explained in my opinion, is the fact that the euro dollar and pound dollar have already broken last week's low. No, last year's low, not week, sorry, year. The dollar yen has not broken last year's high. So the dollar strength is very apparent, very visible against the euro and pound, but not so much against the yen. Despite that, the dollar yen still seems very likely for upside. Still seems destined for upside, in my opinion, despite maybe the lack of it in the first half of the January. All in all, I think it's still very probable that it will happen because dollar yen still had a very bullish year last year, although the closure was not as bullish as the other, was not as strong for the dollar as the other pairs. What are the most likely turning spots, in my opinion? Well, if we zoom into the daily chart, one of the things that we can take a look at is this fib. There are two most likely areas, in my opinion. One of them is this 38.2 fib at around 114, 113.90. That looks like a good long. And the target, the stop loss, it could be anywhere, I mean, it could be around 100 pips, it could be below the 50 fib, or in terms of time, yeah, that could vary. Actually, there are two ways of doing it. One could aim for about 8 to 13 candles, or for a very lengthy number of candles, because the longer, actually, the more likely the price has already bounced from the 38.2 fib. I mean, I'm not talking about extremely long, it's not necessary, but I would say, yeah, there are various options here. Let me just think for a second. Probably anywhere from a week to 4 or 5 should be a zone where the bounce has already happened. So one could go for the shorter or the longer one. I think both are equally valid, in my opinion. Now, the 113.90, 114 zone is in any case a heavy bouncing spot. All right. So 127 would be the target, minus 272 target. That is if price gets there. The other scenario, scenario number 2, is that price doesn't get there, and we would actually see some kind of triangle here. We're zoomed into the 4-hour chart on the dollar yen once again, and you kind of see this as like a triangle pattern. In that case, a 78.6 fib is very likely, which is the 116.68. Let's round it up to 116.70, just to make it easy for ourselves, 116.70. So that is also a very likely bouncing spot, and that's what I find also very interesting potential for long. And then the stop loss here would be below this bottom at 115.40-ish. And the time horizon, well, because we're looking at a 4-hour chart, perhaps, maybe I wouldn't go for 4 weeks here. I think that's more valid for the lower level, for the lower fib. But let's see, 8 to 13, yeah, that should be okay as well. And let me take a quick look at the daily chart. What I'm trying to calculate is the chance that we go up and then down again, because that's the risk for taking a long at the 78.6 fib, all right, is that it can go up and then still retrace deeper before it then really goes up. You know, you probably recognize this pattern if you've been in the market a bit longer, that it makes these ups and downs. So if a long is taken at the 78.6 fib, then we want to get out before it starts to crash again. So I think that a 2-3 day rally should be present before we get downside at the very minimum. So either the 8 to 13 or the 2 to 3 days. AUD/USD weekly chart here. We are in a strong downtrend, but we had a pretty aggressive upside candle last week. If we zoom in, you can see that pretty good bullish close near the high. So that is a bit of a warning signal, and although the trend is down, I would still be a bit cautious with shorts on this Aussie. And it makes me look at this pair and say, well, I'm not too interested in it off the bat. So I guess that's maybe the easiest conclusion. But if you want to get fancy and want to get a bit more creative, perhaps, and a bit more aggressive as well, I guess we could look for a zigzag like this. That is something to think about. Price is moving pretty fast down now, but yeah, that's something that could happen. In my vision, I'm staying away from the Aussie until I get more information. XAU USD, well, we were talking about the break last week of this resistance line and the fact it could hook back. It kind of hooked back. It just missed the 38.2 fib at 1202. Went down to, what is it? Let me take a quick look here. Actually turned at 1204.60. Now moving up, so I would expect price to get up to 1238. That looks like an interesting short level because it is a minus 272 and a 50 fib. Could be interesting. And also a top here, by the way. All right. So that's what I would say from an analytical point of view. I'm not trading XAU USD, so it's more from an analysis point of view. But that looks, to me, looks good if I use the technicals. All right, so thanks for joining us. Take a look at this link, blog.binary.com/weekly trading room to register and get the email with the recording at your convenience. And you can take a look anytime later this week. Thanks again for joining. Next week we will not have a session, by the way, the 19th of January. So we will have to skip that one, but I'm sure we'll be back soon. Wish you all happy hunting and good trading in the meantime, and wish you a good week. Cheers.